Ladies and gentlemen, welcome to Entrepreneurial Finance, types of venture capital companies. Are venture capital companies always the same? Actually, we already had the differentiation. One is investing very early stages, one investing in early stage but later. But is there more differences? If you look at these two examples, you can see a difference. Sequoia Capital on the one hand, the entrepreneurs behind the entrepreneurs. It is a pure venture capital firm. They do venture capital investment in order to make money. On the other hand, Canada Capital is part of the Shell Corporation. They also make early stage investments, private equity investments, venture investments. However, they only invest in a very, very specific set of companies that fit to the Shell Corporation. So it is a typical corporate venture capitalist, and a corporate venture capitalist that has financial and also, in most cases, strategic goals. And that leads to a further differentiation of venture capital companies. So first of all, we have the pure investment companies. And Sequoia is a typical example. 3i is a typical example. This is the most common venture capital form. These companies invest into small, medium-sized companies in all phases, very early, maybe more growth, and which are not traded, so it's still private equity. They are sometimes, in most cases, specialized into sectors because only specialization helps them to reduce some information asymmetry at least, and they want to make money. This is why they're there. They provide money, however, they also want to make money. This is what they are there for. Pure investment companies. Secondly, and this is the second example, so the first one, second one, is corporate investment companies. And a typical corporate investment company was Canada, and also in Germany, Bosch. Now, Robert Bosch Venture Capital, or BASF. BASF has a venture capital arm. Telecom has quite a successful venture capital company called T Ventures. And they invest over the last 10, 15 more years. So it is also a venture capital fund, but the venture capital fund is provided by a large corporation. And these companies, they invest in high technology startups within familiar sectors to the business they belong to. So this is why they do not only have financial goals, but also in most cases strategic goals investing into those companies. The third is, and this is typical in Germany, for example, publicly funded investment companies. And the most important is probably High-Tech Gründerfonds, HTGF, High-Tech Gründerfonds, located in Bonn. They provide venture capital in very early stages. However, they are funded by the public because most of the money is coming from the state of Germany itself. So, and parts of it from large corporations, but most of the money is publicly funded. And the last one, the so-called Incubators, is a phenomenon in Germany especially. You can also call them company builders. Rocket Internet, Project A, for example. They also provide venture capital, quite amounts of venture capital, but they do not only put money in, they actively really support those companies. Actually, they build companies by themselves. And this is what they're there for. So they're not only pure investment company, they help companies more and they build own companies, and this is why they are called company builders. So this is basically the four categories of venture capital firms which you can differentiate in practice and which you can also see out there, and which can also be interesting for you as an entrepreneur to look for someone who invests in your company. The only thing you have to do right now, get a better understanding of the four types of venture capitalists in order to know which is the most feasible for your investment.